Hello and welcome to this Forex Preview at xm.com. I'm Maria Pachordes, and joining me is investment analyst Cristina Barthenido. We'll be discussing the upcoming Nonfarm Payrolls report due out in the U.S. on Friday and the outlook for the dollar. So, Cristina, the U.S. economy seems to be moving in the right direction, with job growth in March expected to have almost doubled that in February. Will the non-farm payrolls data give us a clear picture as to the real unemployment rate? What should we look out for?
Hi, Maria. It's very encouraging how the U.S. labor market is correcting the damage from the pandemic. And this Friday's data are expected to show a sharper increase of 639,000 and another drop in the unemployment rate, which is forecast to fall to 6%. But on the other hand, there are definitely some people who are not actively seeking a job and are on the waiting and see mode because of the virus uncertainty and because some job opportunities have been disappeared since some companies have gone bankrupt, and perhaps the virtual schooling has forced some parents to stay at home. So this group of people are basically not included in the labor force, and because of this misclassification error, the headline unemployment rate is likely understating the unemployment conditions. Probably the actual unemployment rate is larger, and that is evident from the participation rate, which has been stable since July despite the pickup in employment growth. So probably the Fed has a good reason to keep its monetary policy accommodative at current levels until it reaches its target of full employment conditions. So although markets seem to want to direct the Fed pricing in a higher inflation in the coming rates and an earlier monetary tightening, which Powell has been repeatedly talking down over the past few weeks.
Okay, now today Biden will unveil his new infrastructure plan, which may include raising the corporate and income tax rate to help fund his new bill. What reaction can we expect in the dollar?
Well, Biden is highly expected to introduce the idea of higher corporate and income taxes today, which may bring some declines to the dollar, since higher taxes discourage investors to place their funds in the U.S. But the downside pressure may only be a mild one, because Biden may not fully repeal Trump's tax cuts, so taxes will still be lower than the ones before Trump's presidency. And more importantly, the rise in taxes may be a positive development, especially for those who are worried about the mounting debt levels in the U.S., since the new infrastructure bill will not be fully financed by additional debt. Now, besides taxes, Biden may promise that the new bill will create additional employment for Americans, and his $1.9 trillion fiscal support package approved recently may generate stronger NFP releases in the coming months. So an upbeat NFP report on Friday may not be a big surprise for markets, and the ADP private employment report may provide some insight about what to expect from the NFP readings today. So the dollar may not react much, but we shouldn't forget that Easter holidays will start tomorrow in Europe and the US, so probably there will be low liquidity in markets, and that may generate sharp volatility to the dollar, especially if the readings deviate significantly from forecasts. So far, the previous months, the NFP report didn't bring much impact on the dollar, but probably on Friday we will see sharper volatility because of this low liquidity. Now, if we look at dollar yen on the daily chart, the pair has extended its sharp rally closer to the resistance area between 110.90 and 111.35. So downside corrections cannot be excluded in the coming sessions, but the technical indicators haven't really shown any convincing signs of a downside reversal in the overbought territory yet. So the short-term risk for the pair remains on the upside for now.
Cristina, thanks so much. And thanks for joining us at xm.com.